Apes together strong. Hey everybody, Walrus here from Walrus Street, bringing you your news and earnings for the week of March 22nd, 2021. There are bear markets, there are bull markets, and what we're in right now seems to be a kangaroo market, up and down every single week. I feel like we rise for a couple days, and then as soon as Jerome Powell makes his statement every week saying basically the same thing again and again and again, the market drops as though they're not expecting it. Everything was negative. The S&P lost 30 points, the Dow lost 200, the NASDAQ lost 100. So it was bad, it was negative, but it wasn't really terrible. I do want to thank so many of you guys for checking out my interview with MTN here in Korea. If you haven't seen the interview, I posted the link on the community section of my YouTube channel. I did a 13-minute interview with MTN, which is kind of the closest thing Korea has to a Bloomberg type news channel. I will link it below the video. Let's get into it. My TA last week, results reflection, it wasn't really that great. I didn't have a very stellar week with most of my predictions. This week, I ended up going a little more conservative as a result on that. I did not add anything new this week, so the most recent company on the list is Shift. As always, the link is below the video. Check it out if you want. For the last couple weeks, I feel like I've been starting out with like these macroeconomic trend news stories, and it's getting a little old, getting a little tired, and they're not really saying anything new each week. So I figured, let's start out this week with something a little more fun. This was on our stocks this week. The person deleted their account. You'll see why in a moment. But the question was, how do I cash in a paper stock certificate? I'm just now going through my grandparents' desk and I found a stock certificate they bought in 1988 for Meredith Corp for 6,722 shares. How do I cash this in after all this time? Is it even worth anything? Now, this is kind of the dream for all of us. Not having dead grandparents. I mean, finding a paper stock certificate. Meredith Corp, by the way, it's like a media company. It's not really that important. You've got about $1 million right there if my math is right. Around 6,700, there was a 2-to-1 split on March 17th of 95, which left you with about 13,400 shares. There was another 2-to-1 split March 18 of 1997, which leaves you with about 26,800 shares, and it's about $37 a share, just shy of $1 million. The original poster, when their grandparents died, they left everything to them. So this is their property. After they learned that they were newly minted millionaires, of course, they deleted their account to prevent any harassment. Smart on them. But still, just a cool little story. First real news story, ARK's price target for Tesla in 2025. Now, we all know that ARK has been a huge Tesla bull. That's one reason for Cathie Wood's rise to fame is her defense and support of Tesla, her faith in the company. This is on the ARK Invest website. You guys could read the entire thing. It was posted by one of their CFAs. Last year, ARK estimated that in 2024, Tesla's share price would hit $7,000 a share, or $1,400 adjusted for its 5-to-1 stock split. Based on our updated research, we now estimate that it could approach 3,000 in 2025. They used a Monte Carlo model with 34 inputs. The fact that they're doing a forecast with the Monte Carlo is like normal, everybody does that. But the fact that they have 34 inputs is really strange. I can't imagine that all 34 of those inputs are statistically significant. I really wish there was a way for us to see a list of the 34 inputs that they're using for this forecasting model, but I know they won't share that. That's kind of proprietary for ARK. So this is their predicted scenarios. Their expected value is 3,000. Bear case is 1,500. Bull case is 4,000. So even the bear case is over 100% gain over the course of the next 4 years. So that's a 25% gain per year based off the current price. Even the bear case is an incredible growth opportunity. The key updates to their model, what made it different, what made the price go up, they refined their estimates for Tesla's capital efficiency. They added Tesla's insurance business to the model, which was previously not in it. They added assumptions for a human-driven ride-hail service, and they increased the probability of Tesla achieving fully autonomous driving within 5 years. This last point, the fully autonomous driving, you'll see this was actually the biggest driver in their price increase for the model of Tesla. So they have a lot of faith that Tesla is going to have the autonomous driving by then. You know, maybe that's optimistic, maybe it's realistic, we don't really know. It seems a little far-fetched for me, but I know there's a lot of Tesla fanboys and a lot of Tesla supporters, and even if I think this is far-fetched, I still want want to see this happen. I want to see Tesla succeed because it's such a cool, innovative company. This article was a bit of a reality check. I'm a Nokia stockholder. I've got a couple hundred shares of Nokia. I really do believe in the company as far as communications, telecommunications, 5G, moving into the future, eventually into 6G. But this was kind of just a reality check moment for me as an investor. Nokia announces plans to reset its cost base to invest in future capabilities. So I was just reading this and I was like, yeah, I'm a Nokia bull. I love the company. Let's see what they're doing. On a group level, this is expected to lower the company's cost base by approximately 600 million euros by the end of 2023. These savings will offset increased investments in R&D, future capabilities, and costs related to salary inflation. Me, I just completely ignored the salary inflation part. I was thinking, oh, 600 million euros cost saved. They're going to use it to offset the cost of new R&D. Oh, this is just fantastic. I'm so excited. The company's growing. Their planned restructuring is expected to result in 80 to 85,000 employee organization over an 18 to 24 month period instead of approximately 90,000 employees Nokia has today. And that's when it kind of hit me that I was celebrating this cost restructuring, and the reality is this $600 million savings is going to be coming from Nokia eliminating 5,000 to 10,000 jobs. And if you do the math, you know, that's 60,000 euro per job. So these are probably like the breadwinners of the families. And it was just kind of like one of those moments where it reintroduces the humanity into investing. I went from being like 10 out of 10 excited to like 1 out of 10 just disappointed, not with the company, but just with myself for my initial reaction. You have to remember that these are jobs. These are real people that are running these companies. And it's kind of easy when we're just looking at the green and red candles in our accounts to kind of forget that these are real lives here on the line. So anyway, I wish everybody the best involved in this. Now, in line with the Nokia announcement there, let's go to the jobless claims in America. Oh, back to serious news. So another 770,000 Americans filed new unemployment claims. This was actually higher than expected. They were only expecting 700,000, so it was 10% higher. One of the things that the economists in the United States have been talking about, Jerome Powell, the Fed, is that the Fed is more concerned about jobs than the economy's health overall. Seeing another uptick in these unemployment claims, this was kind of the big reason for the market downturn on Thursday and Friday. I know you guys probably saw like the big tick down Thursday, Friday. This is the reason for that for the most part. Jerome Powell had a press conference last week. It was really the same. There was nothing new in this entire press conference. I thought some of his responses were really, really clever. When will data indicate a change in our plans? He said, until we give a signal, you can assume we're not there yet. So this was just kind of a STFU moment. The Fed is now forecasting about 2.4% headline inflation this year, but they don't think that it's really going to have that much of a long-term effect. In other words, that 2.4% is just going to be kind of a momentary spike and then it's going to come back down. Powell stressed that the outlook remains highly uncertain, saying, we haven't come out of a pandemic before. We haven't had this type of fiscal support, referring to the government stimulus. This is uncharted territory. Powell more or less is saying the same thing every week in these press conferences. People are still overreacting. It is what it is, and at this point we just kind of have to wait and see. The government is giving stimulus, there's business loans going out, families are getting some amount of support. I know it's not a lot, but we just have to kind of wait and see. That's all we can do. I don't usually cover bills, but AOC and Elizabeth Warren introduced a bill to put $500 billion towards electric public transit. The idea is to invest into the energy's green infrastructure with public transportation. And out of this $500 billion, at least $150 billion would be allocated to electric rails, vehicles, and vehicle charging equipment. Now, ordinarily, I wouldn't pay any attention to a bill like this, but because AOC and Warren are both high profile, and a lot of this bill aligns with Biden's infrastructure plans and his plans to electrify American transportation, this might be something worth looking into. Do I think it's going to get through for $500 billion? No. Do I think some modified form of this is going to eventually get passed at a lower amount or as part of another bill? Yes. You guys know I covered the ride situation last week, the Lordstown situation with the Hindenburg report. This week, the CEO of Lordstown ended up getting on TV and talking on Squawk Box on CNBC, and he did absolutely nothing to allay anyone's concerns. I do want to play just a small 1-minute clip from this.
Would look at this and say, look, you were far more aggressive in characterizing those pre-orders as true commitments that you have company XYZ that has said, yeah, sign us up for 5,000 or 6,000. Do you regret the way you characterize those reservations?
Well, reservation, Phil, all I can, I don't want to get into the specifics. All I can tell you is demand is robust. We've never said we had orders. We don't have a product yet. By definition, we can't have orders, right? So when you're early and you're years away from a product, in this case, 1 year, and now we're down to 6 months. So now that we have the betas, we are starting to be able to shore some of that up. But the pre-orders did exactly what they were supposed to do, gauge interest. Nobody knew if fleets would buy an electric pickup truck, right? It was completely unknown.
Yeah, I think that's enough. He was asked a very simple question about setting people up with the commitment numbers, and he ends up stumbling over the response. I mean, come on. Plus, the guy is like trying to show legitimacy by wearing a hard hat and a vest inside the factory. Oh, this is so weird. This is when the report was released by Hindenburg. Monday climbed up and then it dipped throughout the week. This is the day that CNBC interview was on TV. You could see the stock price dropped even further. That was its highest volume trading day since the Hindenburg report. It dropped on that day that he did the interview. Once again, I know this is just weekend after hours stuff, but there's literally one buyer right now for Lordstown. And look at all of these people that are trying to exit their position and sell. Suffice to say, the CEO didn't really do anything to allay anyone's concerns about the Hindenburg report. Also, I do want to clarify a mistake that I made in my video last week. Hindenburg did enter a short position before releasing the report. I do want to just note that. Next up, another positive story to follow that one. Wall Street Bets from Reddit donates more than $350,000 to a gorilla charity to prove that apes together strong. It was the Diane Fossey Gorilla Fund. CEO Tara Stowinski describes the fund as the world's largest and longest running organization fully dedicated to gorilla conservation. Here's what's so incredible about it. The fund so far received more than $350,000 in donations, with Redditors adopting approximately 3,500 gorillas in 6 days. For comparison, the charity says it usually registers 20 adoptions in a typical weekend. Say what you will about Redditors and GameStop and whatever, but there's a lot of very happy gorillas right now because of this. So last week on Monday, CHEK got the FDA IDE approval, and you guys remember that I covered CHEK back in January, and this was lovely to see because it was a great profit-taking opportunity for everybody who's been waiting patiently. The FDA IDE approval was delayed because of the FDA redirecting personnel to deal with COVID-related issues. The share price of CHEK ended up jumping up to almost $4.50. Personally, I closed out my position at a 500% gain. I still love the company. I'm going to be re-entering my position when the price drops around $1.50 to $1.75 again. The reality of CHEK is it's still a couple years away from being sold in America. This FDA ID approval is just approval to do a research study. It's not approval for sales. So you still have to be patient with this one, but man, that was really good to get some profits on that. CHEK also released their earnings report this week. It was unremarkable. The biggest news story of this week was the IDE approval. ACRX also released their earnings report. This is another company that I have covered on my channel. Their earnings report was kind of mixed and people didn't really like it, and the share price did drop a lot. First off, their full year revenues were 5.4 million compared to 2.3 million in 2019, so they did more than double up their revenues, which is, I think, impressive. Year on year, they also decreased their combined R&D and SG&A expenses. They did report a net loss on the fourth quarter of about 10 cents per share, but this was in line with analyst projections, which was also 10 cents per share. But their net loss in the fourth quarter of 2020 was only 8.9 million compared to 14.4 million for the fourth quarter of 2019. Also, their net loss for the year was 40 million compared to a net loss of 53 million in 2019. So the company is losing less, making more. We're on the right path. I'm still confident in ACRX. I'm not going to be adding to my position, but I am confident in the shares that I am holding. Nike. Last week, you guys remember I did a little segment on Nike and I talked about an options play. The earnings were a bit mixed. Adjusted earnings rose 15.4% year over year, and they beat analyst expectations, but the revenues were down by about 600 million. The company goes and justifies this by saying they're having a hard time with their supply chain due to COVID. So that's kind of a blanket response every company is giving right now for any struggles they're having financially. They're just kind of blaming it on COVID. It is what it is. Maybe it's true, maybe it's not, whatever. The interesting thing about Nike though, if you guys remember, I mentioned playing a conservative at the money call, and that worked out beautifully. I ended up buying the 141 calls on Monday morning. Monday, we ended up opening at 140.7, and the high of the day was 145. Tuesday ended up going all the way up to a high of 146. I actually closed out my calls. I opened them, closed them in the same day for like a 30% gain. I had one of my viewers comment on my video saying that he ended up closing his out for a 44% gain. So last week I mentioned being really conservative about those calls. That ended up being the right decision, because if you held the calls through the earnings, you probably lost money. But if you were really safe, really conservative, closed out of the call position on the same day you opened it on Monday and ended up collecting those profits, you ended up making out like a bandit. I'm really proud about that one, and congratulations to everybody else who made money with me on that. The most interesting earnings report from last week that I covered on my channel is Lennar Homes. They had a first quarter EPS of $3.20, net earnings of $1 billion, up over 150%. Their projection was for almost $400 million and $1.27 per share, both up over 150%. This wasn't just like a little beat. This was grand slam, knock out of the park type of earnings beat. Their deliveries were up 19%. Their new orders were up 26%. Their backlog, the homes that they can't even get to yet, are up 25%. All right, let's take a look at the earnings upcoming for next week. A lot of Chinese companies reporting this week. Also, a couple of companies that I've covered on my channel, GameStop, Bionanogenomics, and BioLace. I'm not expecting great earnings from Bionanogenomics. I love them as a company, but I can't imagine that sapphire cells were that great over the previous quarter. BioLace, I don't even really like the company, you guys remember from my DD video. GameStop should have pretty good earnings. Some other companies that I am interested in reporting this week: CuriosityStream, really cool documentary service that went public with a SPAC merger last year. General Mills, this is another consumer staple type company. Darden Restaurants, this is a restaurant group that I was invested in after the COVID crash as kind of a rebound type play. And I do want to just kind of take a look at their chart. But the one that I want to focus on this week for my options play is going to be KB Home right here Wednesday after close. So let's take a look on Webull. First up, I want to take a look at CuriosityStream. So if we go all the way out, we could see CuriosityStream went public in October off their SPAC merger. Prices had some fluctuations. This is going to be their first earnings report with revenue, I believe. It'll be interesting to see. They did go as high as $24 per share in February, and right now we're sitting at about 16. Aftermarket is pretty positive. A lot of CuriosityStream's revenue comes from advertising, digital advertising, and also it's a subscription-based service. I do want to see how their model plays out here. Also up, we have General Mills. This is another consumer staple. We talked about Campbell's Soup a couple weeks ago. General Mills is another one that offers a 3.4% dividend. So in times of market uncertainty, this is the kind of company that people generally tend to flock to. And you can see this over the last couple of weeks while we've had these big red days. General Mills stock price has just been climbing since the beginning of March. We were down there around $54.60. Now we're up around $60. While that doesn't sound like a huge increase for a consumer staple, that is a substantial increase in stock value. If we take a look at their financials, this is a healthy company. Every year they're showing growth in their revenue. They're showing growth in their income. That being said, we have kind of hit the top end of the range here. After the earnings report, even if it's fantastic, I'm not expecting a huge rise this week on General Mills. You can see the RSI is entering a bit overbought territory. MACD is really strongly trending upwards, but it's also at kind of the top end of where it's been trading. So even after a stellar earnings report, I wouldn't really expect this to climb much higher. This is Darden Restaurants, Olive Garden, Red Lobster. You can see they ended up dropping off a cliff here on COVID down to about $26 a share. Right now they're at $147.93 is the peak. We closed Friday at $140. So you can see we're actually already substantially above the pre-COVID levels. And the only reason that I'm pointing this out is because people still aren't back in restaurants en masse. I can't imagine that its current share price is actually backed up by the revenue intake. So I'll be looking forward to seeing the earnings report and seeing what they actually forecast. Now, the last thing I want to do this week is look at KB Homes, but first I want to show you guys Lennar's chart. So Lennar, we just looked at the earnings report. The day the earnings report was released, we ended up opening that day at $88.50 a share. We climbed all the way up to $101.55 95. And that kind of carried into the beginning of the next day before finally on Friday coming back down to 95. So this was a really big gain. This was like a 14% gain in the share value in one day off the earnings report. Keep in mind, this is Wednesday, March 17th. Let's go to KB Homes, which is another home builder. Wednesday, March 17th, KB Homes had a complimentary rise off the same earnings report from Lennar. So you could see they opened at 44.87, ended up peaking at 47.37. We've seen this before, where when an industry leader has amazing earnings, other companies in the industry are lifted up with it. And that's exactly what happened here. KB Homes was lifted up with Lennar. KB Homes is projecting to have a really good earnings report this week. Their share price is already back down below where it was when Lennar reported. Playing options around earnings is usually a recipe for disaster, but I'm feeling pretty confident on this one. So my thinking is that I'm going to do some at the money options, short-term options here on KB Homes, just like I did last week with Nike. As soon as I see that pop up around 15 to 20%, I'm closing out the position, taking my profits and leaving. KB Homes earnings are expected to grow. They're expected to deliver a year-over-year increase in earnings on higher revenues when they report the results for the quarter ending in February. The home builder is expected to post quarterly earnings of 87 cents per share in its upcoming report, which represents a year-over-year change of 38% increase. Revenues are expected to be 1.21 billion, up 12.5% from the year ago quarter. The general consensus here is that KB Homes is going to have a strong earnings report. If it has an earnings surprise, just like Lennar, then we might actually be in for kind of a monumental type week with KB Homes. That's it for the news this week. I hope you guys did enjoy the video. Thank you so much for stopping by. I will be releasing a DD video this week. Due to some of the content in the video, I'm not sure if I'm going to be able to release the video on Monday morning at 9:45 Eastern time or on Tuesday morning at 9:45 Eastern time. The reason is because some of the content in the video might be a little questionable for YouTube, so I have to check the monetization first. If the video gets fully monetized, then I will release it on Monday, but if it's not monetized, I'm going to request for an in-person review of the video before I release it. Selfishly, this is because most of my views come from when I initially post the video, and if it's not monetized, then I'm literally going to be just missing out on hundreds of dollars. I hope you guys do understand that. This one doesn't seem too time sensitive, so I should be okay with that. If you guys are new to investing and you want to support my channel, check out my Webull referral link below the video. If you sign up for an account with Webull, you deposit $100, you get some free stock, I get some free stock, everybody wins. I am partnered with Webull, so the free stock that I'm getting is worth $30 or more. If you enjoyed the video today, please like the video, subscribe to the channel, and if you want to be alerted to all my content as soon as it goes live, make sure you hit that notification bell. All right, everybody, thanks a lot. See you next week.